as I come back. As I come back. As I come back. Contact. As I come back. Contact. As I come back.
Hey traders, and welcome back for another live session here on YouTube Live. There is with yours truly, Richard, with Lionheart ElliottWave analysis. Okay, we shall get started. Let me just check some things here. If you're actually on the YouTube Live, just please let me know that everything's okay, so we can get this show on the road. If you can hear me and basically you can see the screen and all that. Okay, now in today's session, okay, this is basically an important session, an important event, because I am actually seeing and getting some confirmations for some market patterns and most likely a reversals. Now the point is that, as you can see here on this daily chart on the dollar index, I have a lot of things to actually share with you today. Today we're actually going to go over multiple things, such as the next VIX spike, the spike in volatility and the fear sentiment, which most likely would actually cause another sell-off in the markets, like stocks, indices, etc. Previously, we had one a year ago, right, with the COVID sell-off. Now, with all the lockdowns and everything that happened, obviously, the things are basically the cycle has ended. That's what I'm trying to say. So the markets have been basically have been retrieving and correcting all of it. I mean, all the entire sell-offs, but something is lacking. Okay, so I do see some strength coming up on the dollar index. Now, the point is that if that happens, multiple stuff will actually occur. I have some actual proof for that, okay, in today's session. We're going to take our time, okay. Now, if you're in the live session, okay, cool, you just need to follow me right there. But if you're watching this later, there will be timestamps available, so make sure you use the timestamps just to go on the assets symbol that would be of your interest. Okay, so yeah, that's basically what I wanted to say. Now, before we actually get started, as you know, there will be a risk notice disclaimer later on at the end, but as a verbal disclaimer, everything that I'm about to say is not designed to induce or influence you in any way, and it should be treated as simple market commentary. Okay, now again, if you're watching this later, basically you can use the timestamps available right there. As, let's say, as a request, if you do like this content, if you do like the content of this live session here on YouTube, please remember to give your brother here a thumbs up. Yeah, links in the description right there if you're actually interested in some of my services, etc. Even if you want to schedule a free charting session with myself, okay, that is available as we speak right now. So yeah, we shall actually get started. Okay, let me get some shout outs. Okay, let me say hello to some people. Okay, we have Oleg here. Welcome back, Oleg, to another session. I know it is a surprise. Happy to see you again too right here. Yep. Okay, sound the video is perfect. Okay, we got the go ahead. All right, y'all. let's just get started right there. Remember, if you want to drop a quick message, use the live chat right there just to type in your message or suggestion or question, etc. Okay, so without further ado, all right, let's actually get started. So what am I going to do today here, I mean, in this live session? It is, as I said, a crucial point in the markets. The markets, in my personal opinion, they are about to reverse. What I mean by that is the fact that 1 year has passed since the actual sell-off, the COVID sell-off in March, right? February, March 2020. Right now, today is, let's say, 26th of March 2021. It is 3:09 p.m. Eastern European Standard Time, 1 p.m. UTC, okay? And we are about to basically embark in a new journey, let's say. So let's say, for instance, we want to go to the Forex calendar. I'm going to start these things off slowly just to basically show you what's in the menu. This, for me, is an important event. The core PCE price index, okay? Now, this is excluding, unlike the CPI, this excludes the common individual, let's say, when it comes to consumer spending. This actually, this contains everything. So what I mean by this is basically this is the Federal Reserve inflation measure, the favorite inflation measure. This is basically what they like to use when it comes to making a decision in regards to interest rates, hikes, etc. Now, as we know, there has been some artificial stimulation of of the economy, with injecting money into the economy just to keep the economy stable. But some, even them, the Federal Reserve's people, let's say, they don't see it, right? What growth? There is no stability. There is no inflation. There is nothing. It's all a bubble, right? So that's basically what we're going to talk about today. So today, I'm going to feed you guys with the following thing. I'm going to go over multiple markets. I'm going to go over the Forex Majors. I'm going to go over the precious metals. I'm going to go over the indices, yeah, and energy, WTI, etc., but also crypto when it comes to Bitcoin as well. Now, on the other hand, I'm also going to go over the global market perspective. What I mean by that is basically the fear over greed period. You know that that oscillator? Yeah, okay. Well, let's say we're going to dive in a little bit on the bull market and see what we actually have, because I have, as I said, some things to share with you, and some things will actually blow your mind. So keep it steady, hey, stick around, and you'll basically see what I'm going to be talking about. Now, let's say, as I said, right now is 15:11, right? Sorry, 3:11 p.m. Eastern European Standard Time, and in about 19 minutes we'll have this release. Okay, now I'm expecting something today. That's why I scheduled this event for this specific moment. So as we will actually make the technical analysis, I'm going to share with you guys my ElliottWave technical analysis, and I have a lot of things, as I said, to share with you. As we go through that, we will see some moves. Now, according to how these moves actually panned out, I will get more details to my preferred scenarios. Okay, I will get confirmations actually, and I'm gonna share with them right here, right now, live on YouTube, just the way you like it. All right. So yeah, that's basically the point. Now, another thing that I want to actually share. Okay, I don't know if I should start this. Let's do it. Okay, let's go to markettrends.net. Yeah. Macro trends, sorry. Yeah. Macrotrends.net. And I'm going to pull up a chart as well. So let's go to the Dow Jones. Yeah, Dow Jones chart, historical chart. Yeah, 100 year. Now, if we go on the chart right here, we don't really need to have all of this right here. So inflation adjusted, I don't think we need it. Okay, we need a clean chart. All right, so we can see the bull market, right? And now you can actually see that from 1915 all the way up to our current times to 2021, right? So this represents from 1929 all the way down to 1932, represents the Great Depression, right? That's a wave 2. Okay, now all the way up right here we have the ElliottWave channel and basically the bull market 1, 2, 3, 4, and then the 5th wave under development. Well, yeah, what am I trying to say right here, okay, is the fact that I am actually seeing some confirmations. Now, what I'm going to show you is basically the following thing. I see this as happening right here in our current times. I'm going to show you why. I'm going to show you how. Okay. Now, the point is that even, I mean, this one, right? You see this pattern? We have it right here on a larger scale. And this one will have it right here on the larger scale as well. What do I mean by this? Well, let me just do this. Okay. Let me show you basically a chart right about there. Okay, so this chart, what we're gonna do is I'm gonna actually show you how I'm labeling the entire bull market right about here. So let's do this. Okay, so as I said, this is wave 1, yeah, grand super cycle degree, wave 2, Great Depression, and all the way up right here we're going 1, 2, 3, yeah, and 4 in a double free. A double free, which is basically doing is panning out right here as an ABC W, X, and then the triangle and the Y, A, B, C, D, E. This was a barrier triangle, and then the bull market prevailed since then, 1986, something like that, all the way up to 2000 when we had the dot-com bubble. Then we contracted in another W, X, Y, where Y is basically the recession, 2007-2008 recession, which found its bottoms in 2009. After that correction, we went up again. But what I'm trying to say is that here we have, I mean, as you can actually see, this correction, this expanding flat right here, we have it right here as well. After that, the market went up, right? Now the market is actually going up. I mean, has been going up. But in February 2018, yeah, the market started contracting again. How it contracted, it looks very, very similar, right? So after we had that expanding flat right here, and we had it here, we went up. Yeah, we went up. How we contracted right about here, it looks exactly alike, right? Now, allow me to show you what I mean by that. So let's actually shrink in this period right here so you can actually see it on our current real-time charts right about there. Okay, let me just give me a moment. Okay, there we go. Let's shrink it down. Okay, so the period actually reflects the time period between 1966 and 1982, whereas this bottom for me would actually be reflecting the COVID drop. Okay, so let me just go to the weekly chart here on Dow Jones, for instance. Okay, so let me pull up the chart. We have a weekly chart right about there. Not to actually mention that with that, I mean, according to the previous videos that I posted on the YouTube channel, etc. Okay, not to mention that I was actually preparing to for a big drop in the markets. Okay, now in, let's say, May 7th, or on May 7th, 2019, I was actually saying that, look, we're going to have something like 28,500 on the, to actually hit the top because of the fibs, etc., and the channel, how it was actually panning out. But I was expecting something big on the downside. Look where my arrow is actually pointing right about here. On Dow Jones, this is basically a weekly chart, right? So on May 7th, I posted that. So if I click the play button, you know that this is not voodoo or something. It just loads the new bars, okay? So nothing magic or something. So yeah, we went down, we went up, right? We hit 28,500, my desired levels, and then boom, drop, big one. Okay, so I was actually ready. Now let's get rid of this. Okay, we'll also get rid of the labels so it doesn't interfere. Okay, so let's basically do this now. Okay, let's go to that. Let's put it and compare them. Okay, let's actually compare them. So you can actually see that how we went on the downside right here. Okay, now the correction starts here and ends here. Our correction starts here and is gonna end somewhere around here. Okay, so what did we actually have right there? We had, as I said, W, X, and then Y in a barrier triangle. That's our wave 4 for basically the market to actually go up. Now what we have, W, A, B in a triangle C, yeah, so P was a triangle, WX, and then Y, A, B, C, sell-off, WX, Y, okay? Or is it? No. The Y is not done yet. That's an A. This is our B exceeding our tops right about here. And most likely, we're gonna retract towards these levels, right? Towards this trend line right here, okay? A, B, C, D, E, and then we'll go up in this triangle. So the Y will be here. That's what I mean. W, X, Y. Okay? So you see, history is repeating itself. We will eventually continue the bull market for the fifth leg, but not yet. Okay, this, as I see it, is a long-lasting period of contraction. So yeah, that's what I wanted to actually show you about that. Now, another thing that I want to show you is fear, right? And greed sentiment in the markets. Because let's face it, what are the charts? The charts are basically the effects of buy-sell emotions. Human beings buy, sells emotions, right? And they actually appear on our charts, and we do technical analysis on it, and etc., right? That's the market sentiment. Participants of the market, both buying and selling, fighting for the title, etc. So it's a struggle, right, between both forces, balance of forces, buys and sells emotions. So the dominant side prevails, and the dominant side actually continues, and it goes with the trend, right, the dominant trend. Now, what I wanted to actually show you right here, okay, is the fact that, you know, if we were to actually take a look at this VIX, VIX chart on the weekly time frame, yeah, we can actually, what am I doing? Why isn't it not working? Okay, so here's the 1998.com sentiment. The dot-com bubble, 2009 dot-com bubble, when everybody were basically, they were trying to induce basically internet buying and stuff like that. People were not ready yet, right? But now they are. I mean, look at us right now. We're buying everything online, right? So yeah, that caused an effect. So the market started basically having those spikes in the VIX. That was the fear. Now notice that these spikes are small, okay? Then it came the recession when the banks went crazy, okay? So lending like crazy, you know, fake money, everything you want. That caused a recession. So that caused this VIX to actually spike, hence the reason why the market started selling off. Now, we had the 2020 virus, lockdowns, etc., right? So COVID-19, perfect. Right? Perfect scenario, right? Everything they want just to keep us, ignorant. Because, hey, let's face it. It is what it is, right? This is the world. Now, after this, I would consider the VIX spike as completed. But there are some teeny tiny things that are actually lacking. So let's say if I want to analyze how after the recession, how the VIX went down, right? We had basically a drop, which is basically this drop right here, right? This drop right here. We had a spike right there, which is this one. We had a drop right there, which is basically this one, right? Our current drop. Now you see where I'm actually going right with this. Then we had a spike, right? Which is basically what I'm expecting right here. And then after this contraction, then we'll have the bull market prevailing, and that's the last, that's the last resort, because once we have this, it's the end of the line. I mean, we're gonna complete something big of a big degree, yeah. So when it comes to this chart that I actually shown you right here, when it comes to this chart, yeah, our current contraction. So let's say, for instance, I'm seeing a VIX spike coming up right now. That's basically our drop right here on this historical 100 and something years of DowJones, right? That's our correction. The VIX spike, the current VIX spike is our correction right here. The triangle that I'm expecting in the Y wave right there. But after that, the VIX 2 continued dropping, which is basically the chance for this to break out and deliver the last fifth leg, right? Just like it did right here. So then it will be time for another set of corrections. Only that this correction would be basically a big one. 2009 lows are inevitable because it is the wave 4 of a lesser degree. That's where its destination, minimum destination, would be. Okay, so yeah, keep that in mind. I am actually seeing a contraction as we speak, and we're going to go on the daily charts, 4-hour charts, etc. We're going to go intraday, we're going to go on all the markets. But what I want you to know right now, and what I want you to remain with from this session, is the fact that something big is coming, y'all. Okay? Something big is coming, and we just need to be ready for it. Okay? And today, I'm actually going to give you, not only that I'm going to give you my technical analysis, okay, but I'm also going to give you some trading setups, good ones, good probability, high probability, I would say, but of course it's up to you to assess them and to see if you do want to pull the trigger or not. So without further ado, this was just the intro of it. All right, we have 4 minutes until that PCE release, but let's just see what we have. Now, according to that PCE release, right, what I'm actually seeing is, I'm seeing a strength coming up in the dollar. This is the dollar index on the daily time frame. So I'm going to start today with the technical analysis. I'm going to start today with the Forex Majors. Then we're going to move over to the metals and WTI. Then we're going to finalize things with indices and crypto, Bitcoin actually, because I have something very interesting on Bitcoin. If you do want to see the full story, my last video on the YouTube channel explains everything, and the the fractal that I'm actually seeing, similar to these ones that you actually have in front of you right now. Okay, now, all right, so basically it's like this. You can actually notice a lot of stuff right here. Fractals, right? Now notice that this thing is January 2017, February 2018 fractal. Okay, cool. But that's not, this is not the same thing, right? We're basically talking about 20th of March 2020 all the way down to 6th of January 2021. Well, okay, well, all right. Allow me to actually explain. You see, I'm actually seeing this one as, why is it doing that? What the hell, man? Okay, I think I need to click it like that. Okay, whatever. So I'm seeing this entire thing as a fractal. It's a self-repetitive pattern. So what I'm gonna do is, let's say I have it already, but I just want to show you so that you don't think that this is voodoo, right? Now here, okay, what I'm gonna do is I'm gonna take this piece right here, which actually occurred before, from January 2017 all the way down to February 2018. So 1 full year. And you can actually draw the conclusion. It's not the same thing, but it is practically a fractal, in which case we're basically, I mean, you can actually see it, right? So what it's doing is doing the same thing it did before, the sequence of it. It's a fractal. For those of you who don't know, a fractal is a self-repetitive pattern. So the pattern is reoccurring. It's the same sequence, right? So yeah, well, okay, all right. You have it basically right here. I mean, you can see it's the same thing, right? So I have it on the upside. So what I'm gonna do is just gonna get rid of it, okay, and continue. Now you can also see that from this part right about there, okay. From this part right about there, here, this reflects that. And that's our bottom right here. Okay? So this piece right here is actually this piece from here. Nice and simple. Now, how it reversed on the upside, right? You can see this is basically how it reversed. I took it from the actual from the other side, right? So you can actually see it. So yeah, it's basically this little piece right here. Okay, let me not press the buttons anymore. This and this, okay, the way they start. Impulse, correction, boom, 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 boom. That's what I'm actually seeing, this entire thing for the dollar index. Now, as you can notice, I'm taking my time with this because it is important. And if you're watching this later, it's okay. Just use the timestamps and go to your preferred symbol. But I have a lot of things to share and say, you know, so I want to do this thing the right way. I'm not in a hurry, and neither should you, because you know, it's important, right? We're talking about trading. Yeah, so as you can actually see, those fractals, I took them, I placed them here just for my own reference, for me to be able to track basically the markets, etc. So for me, this is basically how it panned out right here. This correction is this correction. Now, important thing to note right here, I want to decipher, and my main trigger, and this, for me to be able to pull some triggers and take my trades, yeah, would be whether or not I am going to have that and then this, or we're just going to shoot here directly. That's the main point, okay? So that's the trigger that we're basically gonna see right now. So it's 3:31 p.m. Eastern European Standard Time. So the data has been, let's say, released. Now let's go to the economic calendar right there and see what's up, right? So yeah, we had a 0.1 as forecast. Nothing major, nothing, you know, nothing really, but we don't have an increase in this. All right, we only have basically a decrease and a stable decrease. So as I said before, where is the inflation? There is no inflation. It's only a pump up, artificial pump up, pump and dump, and a bubble. One way or another, this thing is going to pop, and when it does, it's going to be big, right? So yeah, we will actually, I mean, we're going to let the markets decipher, digest these data, etc., whatever, okay? But I don't see something special. I don't see something special right now. It's up to the market right now to decide which way. So as I said, right, what I'm going to do is I'm going to wait to see. Either we're going to have that, or we're gonna have this and then that. Believe me, the upside is gonna happen. According to what I'm showing you, I do see an imminent upcoming trends, bullish move on the dollar itself. So I'm seeing strength in the dollar. The point is whether or not it's going to come now or after a correction. Why am I saying that? Well, you see, according to how this moved on the upside, I'm actually seeing this as the potential for this and that. So our top is currently potentially right here, and then the market, the dollar corrected right about there to gain support on the previously broken trend line of that ending diagonal, etc. Perfect. Okay, no problem. But for a higher probability, preferably, I would basically be wanting that before I would, go long on the dollar, go fully long on the dollar. So yeah, don't get me wrong, I'm not bearish on the dollar. I'm basically seeing the upcoming move. It's just that for a higher probability, I need to see what's gonna happen, right? So remember this fractal that I actually shown you guys, right? The January 2017, February 2018 fractal. You see, it's almost exactly alike, right? Even the last sequence of it, it is exactly, very similar, right? And the way it started is very similar. So it induces a little bit of credibility right here, in my personal opinion. So yeah, that was a daily chart on the dollar index. Now I'm going to move closer to reality and basically go on the 2-hour time frame. So as you've noticed, right? As you've noticed right about there, we went up with the dollar index after this free wave move. It's a free wave move, y'all. Okay, it's not a 5. Okay, unless it's a diagonal. Either way, the next move should be somewhere down before the up end, whatever, right? I'm just saying. But the point is like this. How I'm labeling this is in an A, right? And then A right here. Let me just make this, okay? So my minor, sorry for the pause, my minor degree, blue right there, A, yeah? And then blue, minute degree A, and then B, its correction, right? So this B wave is correcting the A wave. Now how it is correcting it is basically in an A, B, C. So it's a flat correction because this started off with a free wave move, an ABC, and this, right? We don't have a 5-wave move, so we can actually be having a zigzag. Plus, this B exceeded the start of this A right here, which is a flat or a triangle. So far, we don't know exactly what it is. It's a flat or a triangle. But, okay. But allow me to actually share some more details right here. Okay. Now, how we went on the upside. Okay, very well. Let's combine this. Let's say if we can actually combine this with some other form of technical analysis, such as basically the harmonics, right? And here, because wave C went lower than the XABCD, right, pattern. So here we have a potential bearish shark because C goes lower than A and D goes higher than X, right? So it's a bearish shark. Now, not to mention that we have a bearish divergence right here at the potential final point of the ending diagonal in that C wave for that B. Okay, now I'm going to remove it. Okay, so as you can actually see, I'm seeing I'm seeing basically this C wave in an ending diagonal with the overshoot in that, no problem whatsoever. So we're having something right here happening to the dollar, right? It's kind of finding a top. Now, if I were to go on the euro, okay, I'm going to go on the euro dollar here on the daily time frame. Then we're going to shrink it down to the to the 2-hour chart, etc., just like we did on the dollar index. But I want you to get the full picture today. It's going to take a long time, right? We already spent like wow, okay, already spent a lot of time. It's going to be a long live stream, Okay, but if you're watching this later, just click your symbol and you're gonna get the full picture. Okay, so similar to the dollar index here, the Euro USD, same thing. The fractal, January 2017, February 2018 fractal, right? And it's basically this one, which actually panned it out right there. Okay, in case you're wondering which one is that, well, you know, you can just see it right here. Okay, which is basically this point right about there. So here, this I'm seeing as this, right? If you want, we'll do the same thing I did right there. Just gonna clone this, nothing special, just taking this pattern, right? And we're gonna put it here just for you to be able to see it. Okay, there we go. See, the sequence is almost the same, right? It's an impulse. It's a 5-wave move. Cool, no problem. All right, very good. Now let's go back to that. Okay, let's put this where it was, basically. Okay, so the way we actually contracted. I mean, notice the similarity within these two patterns. Here we had a top, which was basically this top. Yeah, you can see the free wave drive, etc. Then we had the contraction. We had a contraction as well. Then we had a rise, right? And then we had a rise here with an ending diagonal in the fifth. What do you know, right? We topped. So I'm not really seeing, I mean, for me, to be honest, this is actually this. So I'm not really seeing something major or something like that. The only point is whether or not for the euro, this is going to be able to deliver one last move up, even if it's going to be a running flat or something like that. I don't know, right? Or it's just going to collapse right now, and that's it. Because remember, I'm seeing that VIX spike coming up. So it's dodgy, right? But if we were to move to the lower degree, let's say to a lower time frame, and by the way, you guys, okay, allow me to actually show you this. I've been around, you know, in these markets, and basically I was actually getting ready for the big impulse on the upside after, you know, back that this was happening back in like 2017 or something like that. Yeah, I've been able to track these entire trends right about there. Okay, so let me just give you some examples. January 23, 2017, I was actually looking up. Of course, there was, you know, probability for the downside, but when I've actually noticed that it actually broke out, I actually continued my views. Okay, so I got what I wanted. We had the French elections gap, which was filled right there, and then basically I just want you to see this, right? As we were approaching the actual tops, I was seeing a wave 4, 5th, and then basically don't miss this cell. Yeah, a big top, right? So as you can actually see, went down, corrected 4, 5, boom, right? And another thing, actually we're going to leave this for the next one, the 1.25 top, which I actually, you know, called previously. I was looking at the wave 5, and basically after that entire correction to continue dropping, right? So notice basically what happened right there. Okay, now after we've contracted, I continued. Basically, this was a complex structure. I had some difficulties right here, but still the trend actually went in my favor and went up right there. So basically, right here, I'm doing the same thing I did before right there, if you understand what I mean. So I'm looking down. It's going to be a correction, similar to the one that we had before, which is basically this one on the right here, this fractal right here. Okay, although the pattern is not the same anymore. Okay, it's doing another thing, another type of pattern. For me, most likely it's gonna be a running flat right here. So what I need is basically one more move up, and then for me to, I mean, for better confidence. So remember that dollar index, the move down? Yeah. Well, on the euro dollar, waiting for that move up, and then basically to pull my triggers, right? That's basically what I wanted to actually say. Okay, all right. Let me just see here. Okay, guys, if you have any questions, just write them down in a chat right there on the YouTube live chat. Okay, now let me just continue. The EURUSD here on the 2-hour time frame. Okay, cool. So we went on the downside, right? How did we go on the downside? Well, we went in a free. Okay, all right, very good. Now I don't understand why this is doing. I mean, it has to do something with this software, this drawing software. Okay, so we went in a free on the downside. This for me is an A. Well, I'm waiting for a B because, I mean, in this B, but this is a leading diagonal for this B. So it's supposed to be a free wave move, right? Now this is a leading diagonal in my A, B, C, so in order for me to complete this B, and I can actually, you know, get on with it and just go short, right? But we do have a bullish divergence coming up right here on the euro dollar, which is something that I want to see. Okay, I don't want this because, you know, for me it doesn't really make a point. I don't have to, I mean, because I'm seeing this as a complete structure in this B for this C. Okay, how much is gonna, I mean, is it gonna correct? I mean, is it gonna continue? It's gonna defy the Fibonacci extensions, etc. It's not really making any sense. Plus, we have a leading diagonal right here. Okay, cool. But still, one way or another, this move is gonna come right here to complete this pattern. That's gonna be my B wave for me to be able to go short. So I'm patiently waiting right now to actually see what's going on. So in a nutshell, for the dollar, I'm cautious. I do see, I mean, yes, the main direction for the dollar for me, from a technical analysis point of view, would be the upside, okay? But what I want is a correction before the upside, so I will have more confidence when it comes to pulling my triggers. Next, it's going to be the GBPUSD. Yeah, pound dollar right here on the daily time frame. So how I'm currently labeling the pound dollar is in an ending diagonal in a C wave, cycle degree C wave. Okay, so how ending diagonal ABC1, ABC2, ABC3, ABC4, ABC5. Okay, ABC 1, 2, ABC 3, 4. Or 4 if it decides to do this, and then whatever, right? No problem. But still 4. So 4, and then the fifth leg. But that's it, right? If it's even gonna manage to do that, we'll see. We'll see. Maybe it's gonna basically do some vibrations right here and then find its tops and whatever, right? But the point is that this is coming for that, right? No, regardless. Why? Well, okay. Let me just show you why. From a larger degree perspective, okay, we had basically this rise, okay, and this entire thing is a correction. How is it a correction? Allow me to show you. Basically, we had the first move, and then we had the expanding triangle, A, B, C, D, E, right? So even if you would label this, I'm labeling this in a WXY. But even if you want to keep it like simple, although it's not really the right way, anyhow, AB, I mean the B wave was the expanding triangle, and then the C wave. We don't have 5-wave sequence here, we have a free, but hey, you know, whatever. How I'm actually labeling this is in a WXY. So basically this was the correction for this. So our main move was that. and our correction was bottoming out right here. Then we're doing the C wave. So structure A, B, C. Boom. Yeah. Okay. Now that we actually said that, okay, let's go back to basics. What would I be expecting for the pound dollar? Obviously, okay, obviously similar to the dollar, to the euro dollar. Although the pound has some other surroundings, let's say Brexit and deals and stuff and this and whatever, a lot of stuff, right? But the way it moved on the upside, I can't help but notice this running flat, right? This 5-wave sequence right here. So this is a complete ABC. No doubt about it, right? If you want to label this as a WX and then ABC, whatever, okay, good luck. But yeah, it's the point is that the way it has been going right here on the upside, multiple overlaps, corrective features, one after another. This, for me, is kind of dodgy. So yeah, but on the longer time frame, I would be expecting big move down for the pound dollar, right? But after it finalizes, for me, if it manages, this is what I'm going to keep track on, right? If it manages to give me, let's say, at least a corrective pattern right here, because let's say this was sharp correction. Let's say wave 2 was sharp. So automatically I would be actually expecting a law of alternation, in which case wave 4 right here to be more of a complex structure. We had basically a free wave sequence right here with a triangle in the middle, which is pretty good. I would say maybe this is W. Maybe. I don't know. Okay, we'll see. But I'm expecting something on the upside. So this would basically give a, first of all, it will give a better level. Secondly, it will give more clarity in a sense that if this will be a free wave move, yeah, it has potential to complicate the pattern, to extend in its complexity, to become a double or triple free or even a triangle. Okay, in the wave 4 green primary degree right here. So enough time, right? Now if we were to excuse me, if we were to zoom in a little bit here on the pound dollar, yeah, let's say on the 2-hour time frame, you can actually see that the way it has been, dropping since, ever since the actual, when it hit the top, right? Well, okay, let's analyze things a little bit right here. I'm seeing a running, contracting triangle right here in the wave B, A, B, right? And then C. So this is W for me as of now. All right, cool. W, and then leading diagonal in A. Leading diagonal is minor degree A. To complete this, I'm looking at this X, right? This can be either a running flat or expanding flat. In a running flat, it will basically bump its head right here in the 100% Fibonacci extensions from A and B towards 100%. In an expanding flat, it will exceed that and try to actually get across this barrier zone where it will actually meet its maker and, should be actually dropping. But yeah, the point is that I don't have yet my C wave, the complete 1, 2, 3, 4, 5 sequence, the impulse in the C, right? So, not to mention that after a leading diagonal, remember guys, this is a leading diagonal. It needs a full correction. It needs basically a B wave, right? So, regardless how we would be looking on the downside on this, right? There is a resistance coming up right here, and as long as it hits the 100%, it meets all the requirements for this to actually be a running flat. X has finalized here, yeah, and then we're basically continuing on the downside. No problem. X can also be a triangle, running, contracting triangle like this. A, B, C, D, E, and then go on the downside. So I'm ready for all the scenarios, okay, for that. Now, to get the full picture, the USDJPY, right? Now the USDJPY, frankly, this one, I do see it going much higher very soon. But it needs a proper, I would say it needs a proper correction for that. Okay, why? Well, take a look. I mean, I'm going to show you something. This correction, this entire thing, it's a very complex correction. I mean, whatever. WXY, it can be labeled in any type you want. WXY or WXYXZ or even simple AB and then ending diagonal in the C. I kept it simple. AB 1, 2, 3, 4, 5 and this X, basically descending wedge. Okay, so far so good. But you know what? This entire thing, guys, look at this. Okay, this entire thing is actually this entire thing. Even if I would try to clone it just for for your own comfort, let's say from here all the way down there, right? Okay, let's try that again, Richard. There we go. Okay, even if I try to do that, right, and then shrink it down a little bit, now it's gonna take some time, but bear with me here, y'all. Okay, this is live. Yeah, remember to speed these things up if you want. Okay, it's basically the correction is practically the same and has the same sequence within it. Okay, that's mostly it. Okay, it's like this. Yeah, okay, you can do it. You can do it, little boy. Okay, so you see the sequence is practically the same, right? And then we went on the upside. Now we're starting the upside for the bigger degree, the bigger structure right there. So USD yen here on the daily time frame. Now we are going, we're going on the upside, right? How we're going on the upside is basically in the ElliottWave channel, whereas we have cycle degree A right here, this black A. The entire correction was a B wave, and then we're going up, right? 1, 2, 1, 2 in a running flat, 3, 4, triangle or complex structure, doesn't matter. 5, we're doing it to top 3 of this. 1, 2, 3. We're gonna have a 4. Okay, that's basically what I mean. We're gonna have a 4 right there, and then the fifth leg, which I'm expecting it to be, extended. Yeah, knowing dollar yen. Now on the smaller time frame, let's say here on the 4-hour time frame, we're basically, I'm basically looking at this little piece right about there. Okay, ever since this update on this little guy, making okay, no problem. So we had basically that type of structure, but I'm giving it the benefit of the doubt, right? Just for me to have more, clearance. So 1, 2, 1, 2 sequence. Cool, no problem. Even though it can be a running flat, no problem whatsoever. So 1, 2, 1, 2, 3, 4, 5, which is basically our free for this. But still, we're gonna have something on the downside, right? So what we want, what I want, is basically a bearish divergence right here to push me on the downside. Now this leaves me thinking about the gold markets as well. Okay, we're gonna go on the gold markets right after we finished with this with these patterns. So yeah, I'm expecting basically some strength in the yen. That also translates into safe haven assets, right? Such as strength in yen, strength in gold, most probably, or some sort of fear sentiment, fear, greed period. I mean, a fear period again, right? Now, moving on to the, and from now on, I mean, for the rest of the majors, I'm gonna keep it with the intraday, time frames like 2 hours, right? So USD Swiss here on the 2-hour time frame, okay? Now, again, if I would be using the harmonic patterns, now this will actually translate into an XABCD, some sort of, cipher or bearish shark, etc. So one way or another, we're looking like we're basically doing a top right here on the USD Swiss. Yeah, not to mention that we have this bearish divergence right about there. So bearish divergence right here, we're basically diverging, yeah, at the end of this fifth leg, whereas this was 1, 2, 3, 4, and there we go, ending diagonal in the fifth to complete this 1, 2, 3, 4, 5 sequence in that C wave or this B. I mean, A was here. This entire thing is a B. We're gonna shoot on a downside. Now, because of the fact that this one hit the top higher, I mean, the B wave went beyond the start of this wave A, right? This means that this can complicate things a little bit into a flat formation. The flat formation, because this started in the free wave, right? So again, similar to the other one that I shown you before, yeah, it's basically either a running flat or expanding flat. The difference between them is that, no doubt about it, we're going to have an impulse. I mean, a motive structure, either an ending diagonal in the C, it's going to be a C wave. Either it's going to be an ending diagonal or a proper impulse. The difference between them, between the running flat and the expanding flat, is the strength in the C wave. Okay, so basically what I'm trying to say is that if the C wave will not have strength and will actually meet, will end somewhere around here, thus not exceeding the end of A, then it's going to be a running flat. But if it does exceed the end of A, it's going to be an expanding flat. And then we're going to basically continue on the upside. Believe me, we're going to continue on the upside. This already started, the USD Swiss already started an uptrend. Speaking about uptrends, the USDCAD is very promising right here. I'm actually thinking whether or not it will be able to break out of this long-lasting channel. It is an ending diagonal right here. It's an ABC with finalizing in an ending diagonal. So basically, what I'm trying to say, what I'm trying to see right here is whether or not after this correction, regardless if it comes now or from the top, right? After this correction, if it's going to be able to break out and gain support here for the big move on the upside. Now, similar to the USD yen, right? Similar to that USD yen, there are some big trends coming, y'all. And that's why I'm taking so much time on this dollar index, Forex Majors, etc. Because the dollar has been dropping for one full year. Okay? According to the cycles, a cycle degree lasts for 1 year. If you think about it, 1 year has passed since the downtrend has started. Well, yeah, not to mention that we're finalizing the patterns. So this means this translates into reversals for this year, 2021. What do you know? Yes, Richard said it. I am actually expecting a bullish dollar in 2021. Yeah, we'll see. Time will tell. Okay, just like it did before. All right. So yes, to finalize things on the USD-CAD, you can see it's doing a wedge right here. Okay, the point is to decipher whether or not it's a leading diagonal or an ending diagonal. Okay, because the way it moved on a downside right here, it's not convincing me. It's can't really pass as an ending diagonal in the fifth wave. So I would say maybe preferably to have basically one more set, and then yes, I will become very confident in this for the upside. But that doesn't mean that the upside is not there, y'all. Okay, so the moral of today's webinar, live webinar that is here on the YouTube, is the following one. The moral is the dollar is going to bounce back anyhow. It's just a matter of timing it, and that's what I'm trying to help you with today for these patterns, right? Now, moving on, the AUDUSD right here on the 2-hour time frame. So yes, we did have the drop, right, from that top. Now, from this top, which actually occurred, let me just switch things back. Let me just 25th of February 2021. Now, because of how this structure actually looks like, right? This can pass I mean, yes, no doubt about it. I am on the right track. This was a 3. This can be a 4, but check this out. This can pass as a 1, 2, 3 right here, expanding triangle in 4, 5th wave, 5 clean waves up. Yeah, which means that 3, 4, 5. That means our top is in. Just like the dollar's bottom was in on the daily chart. Remember I showed you. Okay, cool. But just in case, just gonna keep my labels, leave that as an X, even though it can be a 5th wave. But the difference is, for me, I mean, trading wise, for me, it doesn't really make a difference, all right? Because regardless of how that thing started, I mean, normally it would start in ABC, right? A, that's my leading diagonal, correction, C wave. Yeah, so A, B, C, that's my B for this A. For me, it doesn't really make a difference. It will still pave me on the downside right here. Yeah, so we'll basically see what's up. But the point is, short-term wise, yeah, I would actually be expecting a C wave right here. And you can see how it did the ending diagonal right about here. I would see that as a complete structure in this B wave for this A, and basically moving forward to the C wave. But after that, it has to make a decision, y'all. Okay? Because similar to that. Then let me just do that again with the harmonics. This can also be that bearish harmonic. Now there's a trick to this, because the C wave went below the end of A, right? Below A. So it can either be a cipher or a shark. Well, in either way, it will actually hit 61.8, 17.6, but it can even go a lot higher before it actually contracts. I don't really see that yet, okay? But the point is that we'll see how much strength this small c minute degree will actually have in it. Why am I saying that? Well, it has basically some a very big resistance right there. It's going to be a triple top, y'all, okay? And it means business. Plus, not to mention that it's going to have difficulties, this one. It's going to have difficulties, y'all, okay? So basically, what I'm trying to say is that even if this is gonna be some sort of complex structure or triangular pattern, whatever, yeah, still gonna have a lot of difficulties right about there. So whatever happened with the Australian dollar, going up with the indices and basically benefiting after, I mean, ever since March 2020, right after the VIX stopped from the fear period, right? And speaking about the VIX, I'm going to continue on that. I'm going to zoom in to our time frames, etc. Once we go into indices. Moving on, NZDUSD, New Zealand dollar, US dollar here on the 2-hour time frame. Same thing as the AUD, right? Only that, right? The structure is cleaner. Okay, we do have a free wave move right here, so A. Then we had another free wave, A, right? Remember, this is A, this is RB, right? So A, WX, Y, B, C. We're supposed to shoot on the upside. Now, because it's the same thing as the AUDUSD, I'm not going to do the same thing. It can either be a running flat, going all the way up here, and then go down. Yes, you guessed it. My main trigger, right? And my main point is basically for me to be able to go long-term wise, because remember, it's going to be a big uptrend for the dollar index and a big downtrend for the EURUSD, GBPUSD, NZDUSD, AUDUSD, and an uptrend for USD Swiss, AUDUSD, and USDJPY. USDJPY, maybe it's in its own world, but for sure USD Swiss and USDCAD. But for me to be able to go with the dollar for the next few months, right? For more probability, I'd like to see this move up and track it to see running flat, expanding flat, whatever. For sure, if it manages to go here, for sure it's gonna like meet its maker, right? I mean, you can see it. It's already showing you what it wants to do. Okay, we're not there yet. We don't know yet. We're not seeing that yet. So once I will have more details, then we'll basically move on with it. So yes, now we've actually completed the Forex, the Forex majors, right? We're gonna move on to metals and the crude oil, right? So, okay, I think we have it in the other side. All right, perfect. So metals and crude oil. Now, we're gonna start with gold. Gold here on the daily time frame. But I want to show you something else here on gold. Let's see if we can pull this off on the weekly time frame. Yeah, okay. Now, for gold, until that weekly chart loads, okay? For gold, in a nutshell, right? For gold, what I would be expecting is either from here or slowly, I mean, shortly from the actual bottom, right? I will actually explain to you these patterns, guys. Okay, you can see I'm full of these fractals, and I don't know how, but I just kept on seeing them. I guess it's because I spent so much time on these charts, right? And I'm starting to notice these patterns. Yeah, well, it happens. Now, I'm seeing basically a potential running flat happening right about here in this gold. So up, down, boom. We'll see what happens here, okay? Because it's dodgy, y'all. It needs to break out right there. Otherwise, guys, otherwise it's gonna do that. And then yes, there's no way but up, up, up 3,000 something, 5,000. I don't know. But yeah, it needs to do something right there. So it needs to break out right there. Question is, what is it gonna do? Well, I have some signs which I'm gonna show you, and we're gonna get more serious about this, okay? For this type of point. All right. Now, for the goal, before we go into this, let me just go into the let me just go on the higher degree time frame. So weekly chart right here on the on gold, XAUUSD. Now what I'm gonna do, I mean, you can see the how I'm actually labeling these things. W, A, B, C. It's not a C. The C for me is not done yet. Okay. I'm seeing an ending diagonal here, y'all. Okay. I mean, I'm seeing basically this and then that. And then, of course, the big move up. Why? Okay. Well, I'm going to show you basically why. And for that, I'm going to switch it to a log scale. Let's go zoom out. Okay. Let's go to the entire thing. All right. And let's see the full chart. Right. So we have here gold from 1936. Pretty cool. Okay. Now, how it went on the upside is basically 1, then 2, right? Then 3 right here, topping. Okay. Topping out in August 2011. And ever since then, it's doing a triangle, y'all. Okay? Doing a triangle or a running flat as well. Just similar to the one that, so it's doing that pattern, that big bullish pattern. It is preparing on the long term, it is preparing for something very big up. Okay? That's what I wanted to show you. Because this little thing, right, is going to do this and then just move on up without, I mean, super massively extended, even bigger than this one. Okay? So we're talking about something big coming for this gold. Now, if I were to actually treat this pattern, right, what I will actually see is a support. We have multiple signs pointing us towards something gaining support right here. We had a trend line, right? We have a channel, etc. Right? We have multiple stuff going on. Plus, we're correcting. It is a corrective structure. Now that's the weekly chart. I wanted to show you the basically on this weekly chart. I wanted to show you basically the fractal, not necessarily the fractal, but the log scale. Okay, so we'll get rid of that, yeah, and we'll basically continue with the daily time frame on this gold. And this is going to be important, y'all. As you can see, I'm taking my time. Now the pattern that I'm seeing, I mean right here, it is a complex structure. It is a very complex structure, okay, but it's pointing up one way or another. It's pointing up. Okay, allow me to basically show you what I mean. Notice I see I have this fractal right here, September November 2019. Yeah, after that, November 2019, March 2020, bullish move. Why am I saying that? Well, because it's basically, for me, it's the same pattern. I'm just keeping track of it and trying my best to actually you know, take it. Now, okay, the pattern that I'm talking about is the following one, right? So from September 2019 all the way down to November 2019, right? So basically this fractal for me is this fractal. Get it? So here's what I'm gonna do. I'm gonna take this, yeah, just clone it, okay, and just, but it's happening on a larger scale, on a larger degree. It is a fractal, but it's happening on a larger degree time frame. Okay, that's practically what I'm trying to actually tell you. It's not the same, but the sequence of it is. Okay, so as you can actually see, it is basically the same pattern right about here. So I'm just gonna get rid of it. Okay, we'll stick with what we have so far. So yeah, now in this fractal, and you don't even need to need to like count the waves or whatever. I'm just gonna keep it simple because I know some of you don't actually have the ElliottWave abilities, fractals, etc. You just count the sequence. Okay, count it. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. Ending diagonal right here, ending diagonal right there. We have been going up, and check this out. Okay, we've been going up. How do we top, 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 top? Well, if it's gonna do this bottom right here, be sure that I'm gonna be looking for that running flat. If it does give me the running flat, which it did before, right? When I actually, allow me to actually show you because I know this pattern by heart, right? When it did the previous running flats, and I'm gonna remove the labels so you can actually see it more properly, right? It's basically this running flat right here, this running flat right here, and so on and so on. When I was actually getting ready for this, so with this super massively, calling the correction, and then with this, and then of course with after that correction, after that, moving up, 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 going bearish on this move, and basically after that, contract. Okay, cool. So what am I saying here? Okay, what is this guy trying to say? Well, for gold, okay, for gold, I'm seeing basically a running flat and a move on the upside. We'll see what happens there. So the pattern has given us something. If it decides to do that, yeah, be sure that the pattern is 155% complete. If it breaks out, by the way, it's not supposed to break out of this. So if it does break out of that, it's gonna go up big. The correction is over. It has completed here. That's why, you see, similar to how this moved up. After that contraction, it continued. Right? So yeah. Now that's basically the daily chart on gold. Okay. Now, if I were to zoom in on gold here, yeah, maybe we want to actually track that potential running flat. And how are we actually gonna do that? Okay, I have two patterns which I'm actually looking at. One is the basically the running flat. The other one is an ABC in a triangle, triangular B. What I mean by that is the following thing. So it's either going to be that fractal, this one, the one November 2019, March 2020, running flat, and then the pattern, yeah, or it's going to be this one. And don't get me wrong, you can see it right here, the small one, yeah. It's basically this one in a running contracting triangle, which pretty much maybe it wants to do in an A, and then A, B, C, D, E, and then poof, pop on the upside for this move, right? Preferably until here so we can get it over with. And then we'll see what happens, because I would like to short it right there, but we'll see. Yeah, so right now, short-term wise, I'm looking up on gold, and something tells me that with this VIX spike or something is going to happen, and it's going to cause some volatility in the markets, right? Now, what I mean by this is basically, for that pattern, for sure we have, let's say, a 5-wave sequence here in this A. What we're doing right now is we're just correcting all of it, right? We hit the 61.8 of that in a GP, right? And now, right after that, we've made a 3-wave move on the upside going above that. So it's either a running flat or a triangle right now, or a complex structure. It can also be WX, A, B, either an ending diagonal C or a triangle or something in this Y, whatever, right? It doesn't really matter. What I don't want to see is something lower than this, okay? If we are gonna see a big move down, then I would be looking at the 88.6 right here as the actual support for this pattern right about here, whereas the B wave will be there. So A, B, and then C. It's still gonna come. The C wave is still gonna come on the upside, y'all. Okay? It's just that trading wise, I know it costs pips when it comes to trading. Now, moving on to the silver, okay? Now, how the silver went. This is a daily chart on the silver. Now, how I'm actually labeling silver right here, you can see, from the top, yeah, from the, yeah, okay, like this. Okay. So from the top, okay, can we get rid of this? All right. Oh my God. All right. From the top, we have an ABC. Yeah. For me, this is a W, and then A, B, in a complex B right here. So this is ABC for this entire WXY for this B. Okay. So A, B. We're doing the C. How we're doing the C? Well, I'm suspecting basically an ending diagonal. Like that, right? Because of what, the fractals that I have really, panning out right there, okay? And also some other stuff. But yeah, let's just continue. What are we doing, man? All right, cool. So the C wave for me to be an AB 1, 2, 3, 4, 5. 1, 2, and check this out. Okay, I know. It is like looking corrective and stuff like that. Okay, cool. But this can also be A, B. Don't say you weren't told. Okay? Don't say you weren't told. Maybe C wave on the upside. So while the gold would eventually start rising as the next expected swing, a bullish swing, silver to outshine it and basically do a proper impulse. We've noticed that, right, previously with the Reddit guys who gave basically this in a very fast manner. Okay, so it can do that as well. Okay, I know that it might be looking like it's, you know, breaking for the downside. Do have this fractal as well. Okay, whereas on this fractal, actually allow me to actually show it to you. I took it from somewhere way back. Okay, but it's okay. So we had this, which is for me that, right? So this bottom is basically this bottom. Then we had this, which for me is this, right? So our top is here. Then we had this, which for me is that. Then we had this, which for me is that, but exceeded the high. So this means that this move does not need to exceed the low. But this one did, because this one does not exceed this high, right? So it did. So it's a complete pattern. And this is a complete pattern as well. What type of pattern? You guessed it, ABC. Flat, right? Up. So it has completed the B wave, for instance. And then up. Wow, pretty cool. Okay, now let's zoom in to the silver. Yeah, so the next expected move for me should be on the upside. Silver or here on the 2-hour time frame. Yeah, so after we had those falls, let's say, right? After we had those falls, how it went, how did it go, right? We had a leading diagonal, A, just like all the others. I mean, the Forex Majors that I actually shown you, GBPUSD, EURUSD, all of them, the NZD, AUD. So they're kind of going against the dollar right now, okay? So we had leading diagonal A, and then this complex, not really complex, but something like it, A, B, and then the C wave in an ending diagonal. ABC, 1, 2, 3, 4, 5, right? Contracting, bullish divergence. We're supposed to correct and then should C, right? A, B, C. Minimum. Okay? So the point is, next move should be up for them. Only that silver has potential to go really big with this move. Now, right here with the, moving towards the energy sector a little bit, WTI on the daily time frame. So after the COVID sell-off, which basically on the futures, actually this thing actually hit zero. It was supposed to die and not exist anymore, right? But it didn't. I mean, it's still alive. It just hit zero. Wow. So funny, right? Hit zero. WTI hit zero. What do you know? Well, we went on the upside with a leading diagonal, either 1 or A. Doesn't really matter. We're just going to track that. Okay? Doesn't really matter for us. But the point is that what I want to show you is that from this bottom, this March, April's bottom, April 2020 bottom. So we went up, leading diagonal, we did the correction. So from this entire move on the upside, the correction of it, 100%, guess what? We touched it, right? And we have, or we're having a bearish divergence as we speak. Okay. Well, if you ask me, we're going to end 1, 2, 3, 4, 5. Or we haven't, or basically I'm wrong and we have ended it right here. This is just a correction. We're just, we're just contracting more. Or maybe not that much, but at least that, right? So, yeah, what I'm saying is that similar to how the COVID sell-off occurred in both energy sector and indices when the VIX spiked, which I told you about way back, right? Similar to that, something similar is going to come. So, yeah, just keep your eyes on that. And the way I'm basically labeling this thing is basically what the, come on dude, get away. Okay. So according to that, we had basically the rise leading diagonal, 1 or A, it doesn't matter. Okay, 2 or B, it doesn't matter. So 1, 2, 3 or C, right? The point is that from from that swing to that swing, we had 100% touch. So we have equality already. We don't really need so much, right? And how I'm labeling that is, as you actually see, in a channel. It's an ElliottWave channel. Whereas, you know, we have been dropping right here. This is potentially a wave 4 for this 1, 2, and then the extension 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So 3, 4, 5, right? So in a nutshell, 1, 2, 3. This is 4. We're basically shooting 5th. One way or another, we should be shooting on the upside right here, okay? But it's difficult. And we're gonna basically take a look at the smaller time frame for that. It has an obstacle right here, WTI. It really does, right? Because yes, we might be dropping an AB 1, 2, running flat in 2, right? 3, big move down, you know, smashing everything. Then 4, 5. Right? So ABC pattern potentially complete this ABC. If it's not, and dude, if I mean the 5th wave has ended here, so I'm wrong, it's not a 3, it's a 5. Then, well, this will be 1, 2, 3. We're just gonna top out 4 right here and then just go. It has to go above it, and really, really, guys, it needs to gain support right here. Otherwise, it's doomed. Doomed. It's going to be a massive move down, and that's what I'm afraid of. Is the VIX going to spike now or a little bit later? For that to occur, we're going to go on the indices moving forward. Okay, so yeah, we're done with this. Let's just go on the indices right about here. We went over the VIX a little bit. Okay, on this weekly chart on the VIX, I explained to you a little bit about that, right? If you want to go with that again, use the timestamps available right there. By the way, if you like what you see, be sure to, if you wish, book that free call with yours truly, right? So we can do a charting session together. It will be my pleasure to assist you. And should you have any questions, either, you know, use the links in the description right about there, but also maybe check out the other services that I'm actually offering. And by the way, guys, this is basically a live streaming event. It has been brought to you in a due to a collaboration with Blackwell Global, which is a globally regulated forex brokerage, CFDs, etc. You know, investment firm. So yeah, you can actually get some new perks and free memberships to some of my private services, etc. Links in the description if you want to check that out, of course, right? And yeah, let me know what you guys think. Browse the broker right there. The link, as I said, is in the description if you want to check it out. Okay, so let's just move on to the analysis. So VIX, right? Because we're going to talk about the indices moving forward a little bit, okay? We're going to talk about the indices, but before we do that, let's just take a look at the VIX, the volatility index, right? For those of you who don't know, obviously, the VIX is basically the measures the strength, the fear over greed sentiment, right? So when the VIX goes basically down, the markets are flourishing, indices are going up, etc. When the VIX is spiking, well, that's the fear period, and that's what happened when COVID dropped and COVID came, and basically, you know, you can actually see us locked inside the houses and stuff like that, where everybody is, you know, we're living crucial times, and history is being made as we speak. But hey, yeah, so when the VIX is going up, it's not good, y'all. When the VIX is actually going down, then the markets are actually flourishing. It's a bull market. Everything's okay, nice and peachy, right? Now, here on the 2-hour time frame on the VIX, what I'm actually seeing is not only that I'm seeing a fractal and multiple stuff, right? I'm actually seeing a potential spike coming very soon, because the indices are topping all new all-time highs. Yeah, some of them are finalizing patterns, etc. And I'm gonna go over multiple charts. But let me just finalize what I wanted to actually say here with the VIX. So after it basically found its top with, I mean, after a COVID sell-off. So basically found its top back in March 2020. So ever since then, we went, I mean, the VIX went down in a leading diagonal, A, correction, B, ending diagonal, C. Pretty nice, right? So we have a big A right here, primary degree. Now, there's a tricky part. The B wave is complex, whereas we got the first move up, right? That A wave, yeah? We got the first wave up, A, and then this is kind of like correcting a little bit in a complex structure. W, X, A, B, C. Right here. Y. Which means that our B will complete, which is basically this A's correction. And C is gonna come, yo. Yeah, I'm saying that. For us to go like this for this pattern, to complete this B for this A. So A, B, C. So VIX going up, markets contracting, indices going down bearish. And then while the VIX is going down, the markets to do the fifth wave for the upside. And that's it. Game over. Yeah, market's going to find a stop. Big one. 2009 lows up right after that. Now, moving forward, we're going to go on the, I mean, I'm going to start with the indices right here, European sector, right? So Dow Jones, this is not Dow Jones, DAX on the weekly time frame. So the patterns, yeah, and allow me to actually show you this, like for those of you who like, you know, want to see this. May 7th, 2019. So this basically before COVID was even, I mean, or not. What I was actually looking at was this potential ending diagonal. So all I wanted to see was basically something higher than that to confirm my ending diagonal. So we did have that. Let me just load the new bars, right? So we did have that. We had a contraction in B, just like the arrows are actually pointing, then the C wave. Only that C wave was not that powerful. You'll be able to see that on the daily time frame and see basically my trigger points, right? So it wasn't that powerful, but as soon as it hit something lower, something, I mean, higher, a new all-time high, then it went super massively down. Okay, so yeah, don't say that I wasn't like I didn't know. But for me, right, this entire move on the downside, right, starting something else, y'all. We had the diagonal already. And it's starting something else. So regardless of what the pattern is, even if this will be like, I mean, whatever, triangle or whatever it decides to do, still gonna be a big move down, y'all. Okay? I'm telling you, it's still gonna be a big move down. Not to mention that the way we went on the upside is kind of like correction, y'all. And yeah, this makes you wonder. And yeah. So I'm seeing some crucial times in the market. I'm seeing a VIX spike, and I think I said everything I wanted to say with that, right? So let's say after the, I mean, let's see what we have right there on this. So let's just zoom on to the daily time frame, and I'm just gonna do that before I actually, you know, let me just do it. Okay, here. Let's take this one, all right, and say so after May 7th, right? Actually, no, May 6th. It was the same thing, right? What I wanted to say was that back then I was looking at a correction, then move up, right, close to 14,000 or something like that, and then the big move down, right? And you can see this red box right here, which is by basically the selling point. So basically, we went up in B, we went down in C, and then the 5-wave sequence in the 5th wave, right? 1, 2, 3, 4, 5. Boom. Right after that, we dropped significantly lower. And take a look where my green box is, right? Then we went on the upside right about there. Okay, very good. Now, shall we, okay, let me do that. Okay, it's live session, y'all. Sorry for the interruptions or something like that. Okay, cool. Now DAX here on the daily time frame. Okay, after COVID, bottom, you know, after the COVID sell-off, found the bottom in March, we went up. How we went up? Leading diagonal, right? We went up in a leading diagonal, A, B, C, 1, 2, 3, 4, 5, converging right here, rising wedge. Okay, now this can be A, B, and then we're doing an ending diagonal right here. And you can see the lines. I'm actually getting ready for that possible scenario as well. No problem whatsoever. It can also be a flat correction, W, because I don't like the way this moved on the upside. It has corrective features. Now, an ending diagonal has its corrective features as well. No problem whatsoever. But I don't like the way it actually moved right about there. Okay, why? Because kind of looks like it could be that WX wave right there, y'all, and we're just gonna have running flat or expanding flat. If we break this, it's gonna go and hit this fibs, right? So the EA would be here, B would be there in A, B, and then right after that C to basically come. You get it? And after that, it's like all-time supermassive crash 2019, 2009 lows, which is very low for DAX. Yeah. Okay, so yeah, short-term wise, okay, I'm looking at these patterns. Okay, let's say for instance we had a correction. Okay, but the way it's moving up, this is what I wanted to show you. This pattern, I have it right here because I get the sense that maybe it wants to do that, and that's, I mean, for DAX, that's its preferred. That's actually its preferred reversal sequence right there. So it did it before February, May 2018 fractal, November to 2019, February 2020 fractal. So you can see it has these expanding triangular features, right? And that's what the indices, the US indices, are actually doing as well. Let me just show you what I mean, right? So DAX is basically, I mean, this is the sequence, the fractal that I was actually talking about from November 2019 all the way up to February 2020 when it met the VIX. So yeah, after that the COVID came and basically markets started selling off, right? So this was basically that expanding fractal, let's say, which if it's gonna do it here, it's gonna be a big one, y'all. It's gonna be a big one, I'm telling you. So that's basically the big sell-off. Now it did that before. I mean, so this pattern has done it. I mean, this type of pattern has done it before as well, and I'm gonna show it. I'm gonna show it to you. Okay, it's basically this one, November 2017, January 2018, right? Which is basically this one right here. Okay, maybe my okay, like that. So this, boom. All right. So yeah, indices are doing something like that as well. Okay, let me just go back right here. What did you do, Richard? Can we do that once more? No. Okay, maybe like this. Now moving on and zooming into the DAX chart right here. Okay, so as you can actually see, I'm labeling this in either potentially an expanding triangle or something that it likes to do, or that ending diagonal. Okay, so one way or another, we will have something topping out. So to leave you with something today, okay, the way, I mean, we went up right there after it, after it found its end of the correction. We did another correction, so we did a rise, impulsive rise, maybe A, B. And then we have a 5-wave sequence right there, A, B, C. Now, it doesn't necessarily need to create a new high, but I would like it to do one, an A, B, and then C for that ending diagonal. Okay, for that I'm going to go back to the daily time frame, and I'm going to show you why and how. Because if that's an A, B, normally we should have a C here in an ending diagonal, which is basically my A, B, C. So notice the ending diagonal in the C itself. So 1, 2, A, B, C, 3, and we're just gonna do 4, 5, and then go low. And that's basically, for me, that will be that A, B, C. Because we've completed a 3-wave move right there after that. So A, this will be my B, that's my C. Yep. Okay, so moving on. UK 100 here, FTSE 100. This thing is a mess. I mean, all the others have swallowed the entire. That's why I was so bearish on it previously. Market crash, you see, market cycles here, market crash, etc. Market crash cycles and whatever. Yeah. This thing, the poor thing. Okay, FTSE is, I mean, similar to the some of the Japanese indices. No, sorry, Asian indices. This thing has difficulties because all the other indices, the US indices and the EU indices, most of them, if not all of them, have swallowed and would exceeded the COVID sell-off start. This thing, only 50%, not even. This makes you wonder what the sequence is for this. So longer term wise, okay, longer term wise, yes, we did hit, I mean, a wave 3 back in 2000, right? Year 2000. But cycle wise, this can turn out to be like something of a running flat, which would last like a longer time. Whereas our 3 was here, and our 4 is basically doing a something very interesting, complex. So the 4 is starting A right here, and then guess what? A right here, and then this is our B in a triangle. Yeah, like this. So A, B, C, B. You get it? So A, B, C, that's our 4 for this 3. I know, it's a bit complex, but if you need help with this, links in the description, check it out, book a free session, y'all, and let me know. Now, zooming into the FTSE on the daily time frame. So from that weekly, monthly time frame, this is the daily time frame. So here, it's having difficulties breaking out of this. I'd like it to break out and get it over with, because that will give me confidence for the short right here. Okay, why? Well, because the way it started from the COVID, right? We had a leading diagonal here in this A, correction, and then C, right? So W. Then we had a complex structure X. And now the way we went on the upside, all right, this can be either a triangle right here in that A, B, C, yeah. But I think it's an expanding type of triangle, whereas we've basically made A, B right here, and this type of thing. And now we're trying to shoot for a C wave. Now I know we went on the upside in a 3. That doesn't necessarily mean that this is not going to be valid. The point is that this should be the A, this should be the B, and then C for the start of that. Or if not, even better, because I wouldn't like to see a triangle right now. Okay, because as you can see, the triangle opens up opens the door for both scenarios to happen right now on the FTSE. So it doesn't, the FTSE, if you want to draw a conclusion, the big spike and what's going to happen, which move is going to happen next, you can't really rely on it because it's a triangular pattern. But what it can be, right, it can be AB right here. And we're doing the 1, 2, 3. We need to break out here on the upside. As I said, I'd like it to break out, because if it does, then we're basically um, we'll basically have more probability, because if it does shoot up on the upside right here, my A, B, and then C will finalize, thus my W, X, Y will finalize, and check this channel out, right? That's basically the correction that it needed to do. So yeah, now moving on to the higher time frames, right? I mean, we've noticed, moving on to the other indices, so the US indices right here, Dow Jones on the monthly time frame. Now I actually explained that before, but just, I mean, let's just do that again as a summary, okay? Because I'm not gonna go through the entire thing once more, okay? As a summary, take a look at this that happened before, and take a look at this that happened before, right? So this pattern right here looks exactly alike. It's an expanding flat. Look exactly alike the pattern that occurred, which occurred before 2000 top, but .com bubble, and 2007 top, and basically, yeah, the entire thing. Now, after that, the markets went up, which is basically that. So you can see this is smaller in degree and duration in time. This is bigger. So it's the same fractal, only that here it happened on a larger degree time frame. So what am I saying here? This is this. This is this. Well, what about this? Well, yeah, that's basically our pattern right here. So this free wave move, X triangle pattern. Free wave move, X. I'm expecting a triangle pattern, then move up, possibly a big move like this, yeah, to finalize the 5th of 5th. And it's game over, y'all. It's gonna be big. So 2009 lows are inevitable. I'm talking about this previous wave 4 over lesser degree. Even if it's an A wave. B. Ooh. Yeah. Keep this in mind, huh? Okay. If you want help with this, links in the description, book a free call. Y'all, it will be my pleasure to actually assist you. So yeah, what am I saying right there? Similar to that, okay, we had the free wave move, W, X, and the triangle, right? A. Maybe the fourth wave is not, I put it there, because, yeah, you know, I should. So A, then B. Remember how it's going up, right? I've shown you how it's going up. All of them they're going up in a corrective manner. Be that a fifth wave, which it can, because hey, we're having an ElliottWave channel right about there, okay? And we're topping the channel, which for instance should go at least until here, even if it's a fourth wave or whatever, right? Still supposed to drop right here. So our bull market trend line is the one on the bottom. So even if it's a wave 2, should be, I mean, dropping. That's the point, right? So yeah, W, X, A, B, C, D, E. Yeah? And then move up. Up, big up. That's how it's supposed to be. According to what happened before, because the patterns are so similar, right? Now, that was the Dow Jones on the monthly chart. Let's zoom into the daily chart right here, okay? And let's see how it moved on the upside since the COVID bottom, right? So from March. Now, again, if you would like to label this as a 1, 2, and even 3 here or here, I mean, whatever you choose, okay? 3 would be the shortest wave, because this is a complete pattern. This is a complete pattern. It has done it before, May, October 2019 fractal. That's a complete pattern. So it's part of, is the correction in the middle. So in which case, I'm labeling this as an A, B, C, and not as a 1, 2, 3, 4, 5. Okay? I've seen people labeling this as a 1, 2, 3, 4, 5. Good luck with that, y'all. Okay? Be smart. Don't be a rookie. Now, as I said, I'm labeling that as an A wave. All right, let me make it a big way, a big A. Now, as you can actually see, it's kind of like meeting these extremes each and every time, right? And meeting these lower levels each and every time. So I'm getting the sense that this is my A, and the B wave is actually an expanding triangle, whereas this was A, B, C. We're having the D, which basically contains an expanding triangle in B as well. So A, B, C, right? Ooh, right? And then the C wave. So what am I expecting right here? Well, I'm exactly as the arrows are pointing, I'm expecting a move on the downside, right? I'm expecting something to correct this A, B, and then the C wave. So I'm expecting something big right here. That will be my next VIX spike. Once this actually completes, right? And remember, that can be our triangle as well, like that, right? So from the COVID all the way down here, then we have basically that was our X wave, okay? And then we have A, B, C, D, E. So A, B, C, D, E. Same thing, right? Same thing. Never mind if we don't have the perfect labels or something like that. Doesn't matter. Now moving a little bit closer to it, 4-hour time frame on this on the Dow Jones, right? And if you recognize this pattern, do let me know, because it did it before. All right, and actually let me just show it to you. Okay, if you do recognize this pattern, right? I mean this one, because I mean when I was ready for like the sell-off, right? Before, yeah, bearish Santa. So previously we had, actually let me just remove that so you can actually see the pattern, right? So yeah, previously we had this type of pattern before, okay, like this one. So on a small time frame, 4-hour, it's pointing us on the downside right about there. So now that we're going up, we went back on the 4-hour time frame. You can see it right here. Yeah, you can see it how, I mean exactly how my, so I would say this is maybe expanding flat, etc., or expanding triangle in B, doesn't matter. Next move should be down. Okay, that will open the doors to something bigger on the downside. Okay, and I'm going to take this in stages with you all. Okay, let me just go back. Let's remain on that. So after we had that pattern, I mean that complete A, B, C, we went up, but still we went in a corrective mode, right? We went A and B in a contracting triangle, I mean barrier triangle, to be honest with you. So A, B, and then the continuation C for that. So the pattern was AW, X, Y, big move down right after that, right? So in case on the Dow Jones right here, our pattern is A, B, C, W, A, B, C, X. The Y will be very big. Okay? Hope I made myself clear right there, because it is, you know, a bit important. Now, moving on to the other one, SPX, S&P 500 here on the monthly chart, just like the Dow Jones. Okay, we're basically about to top out right about there, and I'm going to give you multiple scenarios, regardless of how this, you know, how you would actually label this, or how, I mean, multiple scenarios on how this could be labeled, either in an impulse for this, I mean, ElliottWave channel, etc., or as corrective or whatever, right? The point is that one way or another, we should be basically topping something out, right here. So what am I saying? After the 2019 bottom, right? We had 1, 2, and then the extension in 3. 1, 2, 3, 4, 5, topping out in 2018, right here. So right after that, we had an expanding flat, which can pass as a fourth wave, right? This correction right here, fourth wave. Well, it's doing something dangerous right now, y'all. Okay? Because it's either doing an ending diagonal, or it's doing the start of the ending diagonal, whereas this is 1, and then we're gonna have 2. Still, it's a monthly time frame, it's a big move down, right? And 2, and then 3, 4, 5, and then basically to drop. So it's gonna do this ending diagonal right about there. I don't think it has a time to. Okay, so most likely it's just gonna do this. I mean, wait, this, 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 and that's it. You know, yeah. On the smaller time frame, monthly, because I don't want to call like 2009 lows right now. You know, I would give the market more room on the upside. Remember, I'm still looking at that triangle. On the S&P 500, you might see it going really super massively high, but the triangle is not, I mean, it's not out of the question, y'all. You know, whereas this is basically A, B, C, D, E, and then we're going basically, well, so our 4, instead of being here, it's actually here, right? 3, 4, 5. That will imply this wave on the top to be basically 1, 2 for the 3. So we're extending basically the fifth, etc. in that market. But it doesn't really make a difference. If you want, I mean, if we want to actually label this short-term wise, right? After the COVID, the way I'm labeling this is in a B right here, running, contracting, triangle, just the way you see it. A, B, C, D, E, right? You see it does it. So it's not, I mean, you see how massively extended this thing went. So in my personal opinion, this could be the top that we're having on a monthly time frame. And then you see how easily it goes down. So A, B, C, D, E. So A, B, and then a C wave in an expanding diagonal. 1, 2, 3, 4, either here 5, or we're gonna have that and then go down. All right, that's basically what I wanted to say about the S&P 500 on that daily time frame. Moving towards the smaller time frame, remember the Dow Jones, which we did a few moments ago. Dow Jones was showing us that pattern and the next move down. Well, guess what? S&P can actually have this running flat too, okay? Whereas the next move should be down, right? Where we had a complete A, B, C, right? Maybe W or A, whatever. I would say this will be a W from experience because we did that before, right? W, and then A, B, C. Either, I mean, something higher or limited towards the tops, and then more downside. So short-term wise, all right, what am I looking at? Down, up, down, maybe up, but down, up, down for sure. Okay. So yeah, I would be keeping track on this, and I'm planning to actually take all these markets. I mean, take all this gradually. Take my entries. If you need help with that, if you do want to trade with me directly, book yourself a one-on-one session, check the service out, etc., etc., etc. If you need a good, reputable and stable brokerage, then you can basically check the recommended broker, which is basically the investment firm for this, which is Blackwell Global. You can find it right there at the top, right about there. Okay, links in the description for that, as well as, you know, you can find links in the description to book a free call with yours truly. If you like the services, if you like basically what I'm providing you with right here. By the way, if just as a reminder, if you do like what you see, if you find the analysis useful for your own trading, etc., please remember to give your brother here a thumbs up. Links in the description if you want to check out the services. If you want to share it with others, maybe it will actually help. Just share it. Subscribe to the YouTube channel for more content like this. And before I actually forget this, this is mostly gonna, I'm thinking to make this on a regular basis, but this is just, the way it took, the reason why it took it so long is because I wanted to cover multiple things inside it. The rest of them will come as either videos or shorter sessions, obviously going straight to the point. But I wanted to make a recap because I've been absent from the YouTube channel, from these type of live streams, etc. recently. So I wanted to make a quick, full recap on that. But basically, look, if you want these content to come on a regular basis, it may and would and could, would, might, may, whatever, etc. But one condition, please, if I have minimum 30 likes on this current video, sure. So if you like this content, if you want more, I would need minimum 30 likes for me to consider doing another session and do this on a regular basis on that. Of course, the videos will be shorter coming up next, but I need those 30 likes, y'all. So go ahead, click the like button, give everybody here a thumbs up, yo. Okay, the Nasdaq, right? Let me just Nasdaq on the monthly time frame, right about there. Now, unlike the other, this is basically Nasdaq is younger and has been born pretty like it's younger than DowJones and stuff like that. But the point is that Nasdaq is more bullish, right, than all of them. It's like Bitcoin for compared. So yeah. By the way, we still have Bitcoins, y'all. Okay, let's finish up with indices. I'm gonna finish up with the Bitcoin. I did a video on Bitcoin right there. Just check it out. So Nasdaq here on the monthly time frame. Okay. I'm labeling this as a fourth wave in a running flat, and then the fifth wave right here. Now the way it's been, it kind of looks like it's topping out, y'all. Okay, not to mention that this channel, this channel right here is kind of showing that it might, just provide this big move on the downside. So yeah, it's a monthly chart, but I know. Let's zoom in. Okay, let's see more details. The way I'm labeling Nasdaq is after the COVID sell-off, right? The rise, the first rise in an A wave, right? And then, just like the Dow Jones on a small time frame, you see that thing, which the Nasdaq is actually. Take a look at this, and you'll see it. Right about here, somewhat over in a larger degree time frame. So what am I saying? This to be this. Not only that, it did this pattern before, y'all. Okay, and I'm gonna show you when it did it. Yeah, you can see it here. It did it here. All right. So right before. So yeah, when I was getting ready to go bearish Santa, all right, and then of course, went up, went bearish again, went up, COVID drop. Although on Nasdaq it wasn't such such a big fall, but hey, after that COVID drop, right, we went up, and now we're doing a correction, most likely a running flat because it loves the running flats, right? So what we need to actually see. We had the A, cycle degree A right there. Then we had ABC, W, and then AB ending diagonal C, or whatever, impulse, whatever. Yeah, so A, B, C. So W, X, and then check this out. I think this is a running contracting triangle or a running flat, whatever, okay? The point is that it's most likely going to do this type of pattern and provide a C wave. Maybe the C wave not to be that big, but something like this, just to be able to be a running flat or a triangle, etc. Okay, but I see some sort of bottom right here in this A, B, and then more up. Okay, so yeah, That's basically what I'm trying to say. Now on the smaller time frame, 4-hour chart here, Nasdaq, right? Well, you can actually see that pattern, right? That I've shown you before, that it actually occurred, and that. So what I would be expecting would be this to, I mean, this to be this right here, okay? Because we had that, right? And this. So our bottom is this, leading diagonal, this, correction, this, right? Not sure if it's gonna be, if it's gonna go lower like it did before. I mean, this one to go lower than that, so it will actually allow this to be a running flat, okay, or not, or it will actually meet the 78.6, 88.6 range as well. If it does, it's a higher probability for this C wave short, right? So yeah, I'm getting ready to short short multiple markets, y'all. Okay. Now, allow me to finish up with the indices, but only as I mean a higher degree time frames, monthly chart here on Nikkei, because it is it is interesting, right? Ever since I mean, unlike the other markets, all the other markets, most of them, especially US and EU markets, this thing has been correcting ever since 1990s from the Tokyo Stock Exchange crash, right? So the way it went down is in a basically an A right here, corrective in B, C, W. And then we're doing on the upside, we're doing the X wave, okay? Which has chances to hit this, because this is a chance. It's its only chance it will ever have. You know, a W, and then the X wave performing like this, AB, and then ending diagonal in the C wave, which is basically this turquoise super cycle degree right here. So our W is here, our X would be here, but our X will be formed out of an A, B, and then check this out. 1, 2, 3, 4, 5, which makes us cycle degree 1, 2, ABC, 3, 4, 5, and then our X have will be done. If this will hit something higher than that, it will have the chance to be either a triangle or a running flat. So it doesn't necessarily need to go, I mean, this move down doesn't necessarily need to go lower than that. It can be capped until here and then continue up. But still, it's a monthly chart, okay? So if you like what you see, let me know. Leave your comment in the descriptions for sure. Now, basically the HSI, okay, the Hong Kong. Basically, it's complex. For sure, we have an ABC right here. So our A is right here, our B is right here. This can be either, I mean, for sure, this is a wave 3. This is gonna be basically a wave 4. Okay. How it's gonna be? How is it gonna be? Because this one exceeded tops. So it can be a triangle or a flat formation. If it's going to be a flat formation, it's either going to be a running flat or expanding flat. Either way, it's still going to provide at least this. We'll see what happens right after that. If it's going to be a triangle, it's going to be a triangle like that, and then continue up, whereas our 4 will be there. That's basically it. Now, we're done with the indices. Last but not least, the piece de resistance, and something very, very, very attractive right about here. Bitcoin, right? Bitcoin US dollar. Now, before I jump into this, and I did a previous video, but I just want to show you basically something really, really, really cool right here. Now I have this fractal which I've taken, basically it's the same sequence from August 15, December from August 2015 until December 2017. Fractal, self-repetitive pattern. So what I'm saying is that the pattern is reoccurring. This impulse has been seen before, right here. Okay, and for us to do that, okay, what I'm going to do is I'm going to put this chart on log scale. Okay, and what I'm going to do is basically I'm gonna take this, I'm gonna treat this entire rise okay, and place it here to see the resemblance of it. Well, you know, whatever. So let's just try it, okay. Now from here, I'm gonna take it the way up to the top. All right, I'm gonna place it here. I'm gonna arrange it a little bit, okay. Gonna do this as quickly as I can, if I can. Okay, I think I know I'm gonna have to. Either way, I do have it. I'm gonna remove the log scale, so we're back to that, okay. And here's what I'm gonna do. I'm gonna put it here, okay. And you can actually see it's the same exact fractal right about there, okay. Only that I need to go even higher because this thing is going to be massively big. Massive. I'm telling you, it's going to be massive. Okay, so let's zoom in. I do have it already, okay, but I just want you to see it with your own eyes so you don't think that I'm doing some voodoo magic right here. Okay, so let's put it right about there. You have it already. It's the same exact thing. Okay, so let's remove this. Okay, let's get rid of it. Let's go back to where we were, previously. So the way this has been moving on the upside, right? We have a triangular pattern looking right here, triangular pattern looking right here. Impulse, impulse, correction, correction. Move up, running flat. Move up, running flat right here. Okay, then move up, move up. Big correction, big correction. Move up, big move up. Okay, well, what are we doing next? Well, check this out. Previously, okay, we've corrected all the way down and we tagged these tops, which is basically this top, okay. But notice that we might be doing this. Previously, you see what it did, right? It went down with this move, yeah, went down there, then created a high, then created a low, went here, down, up, maybe just to deliver this right here to tag these tops, and then to basically shoot massively on the upside. How? Wow, take a look at this. This thing is massively going, wants to go up, right? Yeah. Now, zooming on to the daily time frame. That was the weekly time frame. This is going to be the daily time frame. And I let basically let people know on that. By the way, if you want to see the full video on that, or if you want to actually have the levels for this for multiple markets, like whatever I'm actually posting on the actual website. If you want a one-on-one session, then check the links in the description. Book yourself a call. Yeah, if you want to discuss that. But also, if you want the levels for these for the Bitcoin, yeah, they're pretty easy. You'll be able to see them in this video as well. But if you want the analysis itself, it's on the website. Just go ahead and browse that. Okay, so I did let everybody know that something, big move is coming up. Yeah. Now, going on the daily chart, now that we've seen the big picture and basically we're going all the way up, yeah, with Bitcoin, basically what I'm seeing is we're just getting started. This fifth wave is just getting started. Okay, so potentially, if and only if, I put multiple levels right here, yeah, 48,500 in aggressive manner, then moderate 42,000, then conservative 38,000. Yeah, okay. So basically, if it's gonna drop like that, notice basically the channel, right? It's gonna shoot massively right away, right after that. So in layers, according to the risks, etc. Right? According to the risks you want to take, or everybody wants to take. Now, moving on. Now that obviously, I'm seeing that this is a correction, and basically the Bitcoin, in a nutshell, after this correction, just big move, big impulse on the upside. That's it. Now, on the smaller time frame, 4-hour time frame, you'll be able to see this better, let's say, right? Whereas we hit that top, we went down in a leading diagonal A wave, right? We went up in an ABC, all right, so B, and now we're doing some sort of a C wave. I'm suspecting an ending diagonal, right? It depends on how it's dropping right now, because if it does this, then it could do that, and then just go up right there. But the pattern, yeah, should be this. Either running flat right here or expanding flat if this has more power. I would be expecting an expanding flat. But hey, you know, the move is up and the levels are right here, here, and here. All right, these ones. So yeah, check those out. They're on the actual website. Now, since we've coming to an end, finalize this. Now, again, last time, if you do have any questions, let me just say hello to more people right here. Hey David, hey Oleg, hey Christos, welcome back, y'all. Welcome for this for the session once more. Thanks a lot. Now, again, for those of you who are in the actual live stream on YouTube, if you have anything to add or other questions, just use the live chat. If you want to reach out to me later on, either leave your comments in the description right there. If you're interested in some of my services that I'm actually providing, let me know via private message. You can have my contact details right there. And if you're watching this later, there are timestamps, obviously, so just jump to the preferred symbol, okay? And again, if you find my analysis useful, please remember to use your to give your brother here a thumbs up, share it with others, etc. If you're interested in working with me, let me know, okay? But again, as a last note, this this live stream has been brought to you due to a collaboration with Blackwell Global, which is a broker that I'm recommending right now. Trustworthy, globally regulated brokerage, okay? Forex brokerage, CFDs, etc. Check it out. It's really cool. Yeah, I do like it. I am actually using it myself. Yeah. So if you need help with that, links in the description as well. Maybe you want to open an account with it, or maybe you want to join my MAM or whatever program. Yeah, so yeah, until yeah, that's basically what I wanted to cover for today. I hope you enjoyed this session. If you did, remember, yeah, like me. Okay, thank you so much for your time, guys. Thanks a lot for tuning in. My regards to everybody who was actually live right here. Thank you so much. Yes, thank you, Christos. Appreciate it. Thanks, Olive. Cheers, guys. Have a great weekend ahead. Yeah, not only that, but as I say to all my traders, until next time, stay in the green and many pips ahead. Bye for now, y'all.